Hey guys, this is Manish. Let me talk about when I was just starting out. I had a very clear belief trading was all about speed. It felt like the winner was the one who reacted faster than everyone else, the one who pressed the button first, who entered the market the very second a candle started moving. I thought success meant the number of trades, constant actions, and the feeling that you are always in the flow and never missing anything. And let me say you, I tried to catch every moment. If I saw movement and I entered. If I was afraid of missing out and I entered even faster, and when the market went against me, I always found an excuse. Wrong indicator, bad news, poor timing in the wrong market. Anything except admitting one thing, that the problem was me. Over time, it became obvious that the market doesn't like haste. It punishes impatience very harshly. Those who can't sit still, those who confuse activity with results, and on the other hand, the market starts rewarding those who know how to wait and make decisions calmly, without rush. I realized that discipline is not just a nice word. It's not about personality or abstract willpower. It's a working tool, just as important as any strategy or indicator. Discipline is what keeps from entering chaos. It's what stops you from pressing the button just because price switched or candle looks nice. With me, I noticed one more thing. The same strategy is the hand of a disciplined and trader. In the hands of an impulse one becomes two completely different strategies. Discipline doesn't make the market easier, but it makes you more resilient. It helps you take only those who moves their probabilities through on your side and calmly skip everything else. And that's exactly what made my trading stable. Not new indicators and not secret settings. The longer I stay in the market and the clearer it becomes to me. Most people lose money not because they have a bad strategy. They lose because they don't know how to wait. If you feel that you often react to every candle and enter trades emotionally and later don't even understand why you opened the trade in the first place, then the problem isn't the market. It's not a lack of strategy. It's a lack of discipline. If you want to start trading more calmly and feel that you are truly in control of your decisions, you can check out my Telegram. There I show trades in real time, break down trends, and share my working rules and a calm structure approach to the market. There, I also give access to my AI bot. It's built around discipline. It doesn't enter trades emotional. It doesn't react to very candle, and it waits until the market itself puts the right conditions together. Filter signals and acts only when the key parameters line up. No rush, no illusions. The link is under the video and check it out if it resonates, and everything that is straight away to the point. RSI is one of those indicators that most people use too literally, for many. It's just a simple scale with members, and 70 means overbought and 30 means oversold. And that's where it ends. But over time, I realized that RSI actually shows not so much the state of the market, but the state of the trader. Every time RSI approaches the overbought or oversold zone, most people react the same way. A sense of urgency and appears the thought comes up. That's if I don't enter now and I will miss the move, and that's exactly the moment when people stop following a plan and start acting on emotions. They way too early, without confirmation, and just because the number on the indicator looks right. And this is where the losses are most often bought. The real meaning of RSI is completely different, and it's not meant to give you a perfect entry spot. It's there to tell you that the market has reached a boundary, and a boundary is not a seat to act. So it's a signal, a pause, a moment to slow down and look deeper. RSI is very good at showing where the crowd starts losing control and where greed appears, or in the contrary, panic. But that doesn't mean the market is already ready to reverse. Very often, price can stay in overbought or oversold territory much longer and then as traders patience has. And if you enter just because RSI has gone past level, and if you are essentially trading impatience, not the market, I use RSI differently. What matters to me is not the reach 70 or 30. What happens next when RSI starts coming back and when it exits those zones? It means the market has already taken the step, and that moment has either exhausted itself or started to change. And that's when it actually makes sense to think about an entry. In those moments, you are not just entering on the emotions or trying to guess the top or bottom. You're entering when the market has already confirmed the decision. It's a completely different state of mind. So calm, clear, without the feeling that you're jumping into the last trade. That's why for me, RSI is not about signals, it's about discipline, and it constantly reminds you, don't rush, Don't react first. Wait for the moment when the market itself shows that it's ready. And if you know how to wait for that moment, your decisions become much stronger. Price is rising confidently and candles have almost no wicks, and RSI is approaching the 70 zone. This is the most moment where most traders speak psychologically and they think that it's a reversal definitely coming. I need to enter before it's too late, and about 80% of market participants open a sell trade right at the moment when the market hasn't shown even the slightest sign of weakness yet. So this is the classic crowd trap. The trading against the move just because it feels like it's too high, but the trend doesn't reverse simply because someone feels that way. So I do nothing and just wait 2 candles and 2 small pauses, and then when the T movement happens, RSI doesn't just watch the overbought zone and crosses back below the 70 level. This is not an emotion, it's a fact, and it means buyers for the first time in well and have stopped pushing the price higher. Only after that, I do open a sell trade and no guessing, no rush, and the difference is immediately visible. Price doesn't jump and around doesn't make fake spikes. It goes down calmly as if it's decided. The pullback on its own, and 2 minutes later the trade closes in profit, $310. But the amount is not the main thing here. Process is, and I entered not because I wanted to catch the top, but because I saw an objective signal. And at the moment I almost again realized discipline, it's the ability to wait. Even the entire market is screaming enter now. And that is exactly what brings profits, not the attempt to be smarter than everyone else. Now the opposite situation, price is falling and the market is red, candles are long and RSI drops below the 30 level. And this is where the most interesting thing happens. People start selling exactly when it's already too late. They see the drop and they're afraid that one more move and everything will collapse, and they enter at the worst possible price. This is pure emotions, fear of missing out on the move, but the market doesn't fall forever. It breaks, and any string selling eventually comes to an end. So I will going to wait and observe. I don't guess. As soon as the RSI starts turning upward and crosses back above the 30 level, it means one thing: sellers are no longer in control, their energy is exhausted, and that's the moment of strength. I enter a buy trade. Notice that there are no sharp spikes or aggressive impulse. Here the market rises smoothly as if returning to a level where it belongs, comfortable. 1 minute later, the trader closed $270. And again, this is not guessing where the button is. This is reading the market emotions, and when the crowd is panicking, I stay calm. When the crowd is selling, I wait for them to run out of steam. And that moment brings the cleanest profit because the market always gives an opportunity. You just need the patience to wait until crowd emotions start working for you and not against you. Okay, and here is the third movement that separates a professional from a beginner. Look on this, RSI has been moving between 45 and 55, and this is not a range of a classic zone of uncertainty. On the chart, there is no trend and no impulse, no real effort from the either buyers or sellers. And what does most people do in this situation? They enter on luck and they hope price will surely go somewhere, but the market doesn't owe anyone anything. And I took the chart and see RSI is flat and SMA is flat, so candles are small, everything, and says the market is simply resting, and I will not going to enter on this. And this is where the most important part begins, and conscious decisions not to enter is the same professional skill as well-timed entry. A skip trade is save money and save energy and save focus. Most traders below their accounts not because they choose a bad strategy, but because they jump into places where nothing needs to be done. They try to create more opportunities where none exists, and here is the RSI tells you honestly there is no signal. So wait. A few minutes later the market does make a push upward, but without structure, without confirmation, without strength, and I still don't enter because discipline is not only the ability to press the button at the right moment, it's the ability to not press it when the market is silent. So this trade, or rather the absence of it, brought me more benefits than the many of profitable entries. So because it again provides a professional makes money not by the number of trades but by the quality of decisions. Sometimes the best entry is no entry at all. This week, important data on the US labor market was released and the numbers came out stronger than expected. Then the dollar reached almost immediately, and this is exactly the type of news where the market moves fast, sharply, and with very little pause, and in moments like this, many people try to enter as early as possible and ride on the impulse because they afraid of missing the move. So USD/GPY did move up very aggressively. Within just a few minutes, price made a stronger push and higher. But if you look not only at the candles but a bit deeper, the picture becomes more interesting. Even before the news and ages was released and RSI was already in a strong overbought zone. That means the market was already overheated and buyers were pushing the move with their last remaining and strengthen them. After the data came out and price made one more sharp push upward and RSI moved even higher. For most people, this looked like a confirmation of strength, and for me, it was like a signal to be especially cautious. And in moments like this, I don't rush to enter. I wait because strong news on overheated market often leads not to a constitution, but to a sharp correction. I waited for the moment where RSI started to make back down on the overbought zone. Not at the peak of emotions, not during the moment of euphoria, but only after the market showed up the first signs of exhaustion. And only did I enter trade on the corrections. The more turned out to be fast and clean, and the pair pulled back quite sharply, and the trade closed with a solid profit. Everything happened within just a couple of minutes. And for me, this is a very illustrative example. It's not about trying to be faster than the crowd, and it's about being more disciplined. I entered later but more precisely, not in emotions, but at the moment when the market had already started to change its state. And that's exactly the difference between emotional trading and systematic trading. Discipline, not the boring part of trading, it's the foundation, and it what allows you to stop chasing at every candle, stop reacting to very small move, and stop trying to catch the perfect entry. And that doesn't actually exist. Every day the market is creates hundreds of opportunities, but only disciplined people helps you to choose the right ones. And RSI is not just an indicator, it's a patience trainer. It shows you when you need to wait and until the market itself gives you a signal. And if you want to truly learn how to wait for confirmations instead of entering on emotions, you can check out my Telegram. There you will find a real-time trades AI bot that works by the same logic, and copy trading for those who want to see discipline in actions. Leave a like, write a comment, and remember, the market doesn't pay for speed, it pays for patience.